Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong historical structure level for this market. In fact, we can see how this area was acting as previous support here last year. Then the market broke below that zone. The previous support was turned resistance, and the market did respect the level as resistance. And then we had the break above that zone, and this previous resistance was once again turned support at this level. And at the moment, the market is testing this previous resistance turned support. And from here, there is definitely the possibility to see more potential bullish price action being created away from this level. We can also notice that from a pattern standpoint, we have a strong impulse followed by this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up exactly at this area. So essentially lining up with this previous monthly resistance turn support here, creating a confluence of support at this level, inside of which we could easily see more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. And we will be speaking about institutional longing later on during this analysis. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective as well, we can identify strong structure exactly at the zone that the market is currently testing and rejecting. In fact, we can notice how this area was acting as previous support here, preceding these rejections to the upside. Then the market broke below that zone, and that previous support started acting as resistance here, preceding all these rejections to the downside. Then we had a break back above that zone, and all this previous resistance started once again acting as support. And as the market is testing the support, we could expect more potential bullish continuation being created away from this level. Dropping down on the daily time frame, what do we have? Now, before we dig deeper into what we have from a daily perspective, let's first go and see what we have when it comes to the commitment of traders, so the COT data, so what hedge funds and the big players in the market are doing. And by the way, I did speak about NZDUSD a few days ago when the market was around this area, explaining all the reasons for which we could expect this rejection to the upside. And by the way, you find that previous analysis linked in description, so you can go and check it out for more free education. Now, as I was saying, if we go and see what we have when it comes to the commitment of traders and we check the data precisely for the NZD, the first thing we have to keep in mind is that if we are checking the data for the NZD, we are actually already checking NZDUSD because all the currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have been massively increased. We went in fact from having minus 19.6k net positions all the way up to having minus a 1k net position. So clearly institutions have been increasing their net positions, moving back to the bullish side for the NZD, which means that they have been increasing their longs and decreasing their shorts. Institutions went in fact from having 7.9k longs all the way up to having 14.1k longs, so essentially double the amount of longs, and shorts got decreased from 29.7k all the way down to 15.1k. So longs got doubled and shorts got almost cut in half. So clearly institutions expect a potential move higher for NZDUSD. Now, From a technical perspective, if we look at the market here from a daily perspective, we must notice how at the moment the market is still in a bearish trend. It has been creating lower lows and lower highs, and until it will continue creating lower lows and lower highs, we cannot expect more bullish continuation. So what do we need in order to get a potential move higher? We need to see a break of structure, and that would only happen in this case if we get a break above the structure, so in this case above the previous high, which is this level here. So only if the market breaks above this previous level of resistance, at that point, all this previous resistance would become support. And on the retest of the previous resistance turns support, this is where we would have good probabilities of getting more institutional longing, at that point further increasing the probabilities of a potential move higher away from this level. And by the way, make sure that you join my free Telegram channel, which you find here on the screen and also linked in description, so you never miss new updates. Now, as I was saying, from a daily perspective, things would get interesting if we get a break above this level, because if we get the break on the retest of the previous resistance turn support, this is where we would have good probabilities of getting more institutional longing, which at that point would further increase the probabilities of getting a potential rejection to the upside away from this level. So what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best timeframes for that are the intraday timeframes, so for hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish market to an intraday bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside away from this level, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.